Coming up on Business Incorporated, Ghana is set to undertake production of local vaccines under a fill and finish agreement. Nestle will start paying cocoa farmers cash if they send their children to school. Plus, UAE authorities have announced the resumption of all inbound flights from 12 African countries starting January 29. Hello, welcome to the program. I'm Ladi Williams. Well, the trading week is almost over. Let's take a look at how the African continent is looking today. It's mostly negative sentiments observed right there in the markets. We see Nigeria's main index is the lone gainer, up 0.39%, while South Africa's benchmark index is down by almost 1% at intraday. Elsewhere, Egypt's index also dips 0.37%, while the Nairobi Stock Exchange closed yesterday's session down by almost 1%. Over to the Middle East, where sentiments were mostly positive. Peep at the Abu Dhabi and Dubai markets saw both indexes trading in different colors. The Abu Dhabi index fell 0.91%, while Dubai's index gained over 0.5%. Still within the region, Saudi Arabia's index added 0.02% at intraday. Also, the Qatari index was up as it rose by 0.22%. And over to Europe now, the German parliament has begun its debate on a nationwide vaccine mandate. It's a controversial topic. If legislation is passed, it would almost certainly be reviewed by the country's constitutional court. German business leaders are also weighing in on this debate. Let's bring in Stephen Beardsley now right there. Great to have you, Stephen. Well, first, why is Germany pursuing a vaccine mandate at all?
Well, currently 73% of the German population is vaccinated. Virologists here say that that's not enough to ensure that future waves don't affect society at the level that they have previously. We're talking about lockdowns. We're talking about restrictions on who can come inside businesses, and in some cases, who can come to work. So this was an idea that was taken up last year, at the end of last year. Remember, as Germany faced a very hard Delta wave of the coronavirus and was eyeing that coming Omicron wave, that added to the urgency. There were some groups that were immediately for it, including educators. They said that they definitely wanted to see one come in place, but it has been a very controversial idea. The new Chancellor, Olaf Scholz, he is for the vaccine mandate, but within his governing coalition, which comprises two other parties, there is some uncertainty. So we are seeing some ideas about how this can be implemented, including whether it would affect only those 18 and older or perhaps only those 50 and older. But the debate is just now beginning.
Yeah, quite a controversial one there. But what do businesses make of the idea?
And some of the earliest reactions we saw were last year, frankly, when this idea was first announced. We saw that the German Association of the Mittelstand companies, now those are companies that are small, medium-sized, they're often said to make up the backbone of the German economy. They were very much for it, that association was. On the other hand, one of Germany's largest unions, Verdi, the head of that union, saying, you know, this would maybe stigmatize workers. So you started to see two different opinions there. Lately, however, it's been a bit more agnostic. You've seen firms saying that if this comes into place, then certain provisions need to be taken care of. That is, that the burden on companies needs to not be too great. That's what we heard yesterday, for example, from a joint statement from two of Germany's largest associations, one, the German Association of German Industries, the other of employers. They said, look, if you're going to do it, if it comes to it, then make it easy on us. Don't make it too hard. There are benefits and drawbacks to this for employers. One of the biggest benefits being that perhaps this does bring the German economy and the German business world back to a normality that can really help when it comes to staff absences, when it comes to limiting customers who come to your door. The drawbacks, of course, being those questions of what does it mean for my relationship with my employees? If they're not vaccinated, what do I have to do? That could be very awkward. That could lead to employees not appearing or to bad relationships.
Quite interesting, Stephen. But how was the markets in Europe yesterday?
Well, European futures gave an indication of what we all expected, which is that after the Fed's decision to raise interest rates in the U.S. beginning in March, we saw Asian markets slip, and now European futures showing that they will also likely slide as well. That was after gains yesterday, after a bit of recovery in London, Paris, and Frankfurt. So we would expect today, looking at the markets, that they probably will fall somewhat as they adjust to that new reality of the dollar getting stronger, of the U.S. market rather, losing some of its steam in the months to come. On the bright side, at least for German markets, Deutsche Bank, one of the biggest bank in the country and a major share here in Germany, producing its best results in 20 years. So that could add a little bit of steam to the markets here in Frankfurt.
All right, that was Stephen Beardsey right there in Berlin. Thank you so much, Stephen. And now let's head to the UK. We have Juliana right there. Great to have you, Juliana. So EasyJet's load factor, a measure of how many seats were filled, fell by about 67% in December from over 80% in October and November. I guess it's thanks to Omicron.
Okay, so not to be taken by surprise, really. We know that before the emergence of Omicron late last year, the travel sector was hoping that they would be finally getting back to normal, which is why we saw pretty high capacity numbers for flights from the UK to Europe, the budget airline EasyJet being one of them. As you said, their passenger capacity was at 80%. Then, of course, new restrictions were put in place, lots of countries closing their borders to the United Kingdom, and they saw this plummet to 67%. Having said that, in the trading update that they released a couple of hours ago, it does show that people are starting to book again. In fact, their final quarter numbers, so the 3 months to December, did show that losses are still there. I believe we're at 213 million, but way down, almost 50% down than it was in the year before. Then, of course, we had the announcement from the Transport Minister Grant Shapps on the 5th of January that no longer are people having to fly into England and take these pre-departure tests, which is a good thing. So they are starting to see robust bookings for the spring and summer, but still only travelling at a capacity of 50% on what they were using prior to COVID 2019. Seems like a lifetime ago.
Thing I must say. But now let's look at the booming streaming business. See, UK's competition watchdog has launched an in-depth study into the music streaming market to assess the big record labels and services such as Spotify. What are the concerns here?
Yeah, it's a good question, and I think this is a question that has been dogging the music industry for years now, because we know that most people no longer buy records, they stream. The streaming industry is booming, but there have been concerns, particularly from independent artists, but also from critically acclaimed and very famous musicians, that they are not receiving their due returns from streaming. So this has been an issue in the UK, particularly as for the 7th successive year, streaming is growing, and it's growing vastly. Billions upon billions of streams are taking place each year. The money is not being returned. There has been several urgent questions put through the House of Commons by a number of different MPs, so much so that now the Competition and Markets Authority are going to be having an in-depth discussion. There have been several big names of record labels sit in front of the select committees, whether it's Warner Brothers, YouTube, Spotify, asking how these streams are turned into credible transactions. And really, it's from these investigations that the CMA are now going to be conducting this inquiry. And really, they said they're going to be looking at the broad market, so from consumer to creator, to find out how this lucrative industry can start trickling down to those who are the creators behind it.
Yes, and well, I see markets were rattled, as hawkish Fed signaled U.S. rate rise coming. But I saw the UK's FTSE 100 was in positive territory earlier. How's it looking now?
still in positive territory, firmly in the green. You're right, there's been a roller coaster of market activity. There were so many gains yesterday. In fact, I believe the FTSE had one of its highest days in almost a year in terms of gains. It's still very much in positive territory intraday, but just this is being led by the banks. Of course, we know that profitability is pretty low for banks. If interest rates are low, any sign that interest rates will rise will lift the stock market of banks, and that's what's happened, and that's one of the reasons why the FTSE is very firmly in positive territory at intraday. Standard Chartered, Lloyds Bank, Barclays, NatWest, all the big banks in the UK are trading up between about 3 and 4% at intraday. In the currencies market, the British pound is currently down on the US dollar by 0.5%, up on the euro by 0.01%, and down on the Japanese yen by 0.07%. Sorry, I'm having to look at the market numbers from over my shoulder there.
It's fine. All right, we'll see if we'll have some pullbacks tomorrow, as it's become accustomed to right now every Friday. We'll see how it plays out tomorrow. Thank you so much, Juliana.
Thank you, Ladin.
All right, let's look at what's happening in Asia. Asia-Pacific markets broadly fell today as investors reacted to an overnight update from the U.S. Federal Reserve that indicated the central bank's plans to raise interest rates as soon as March. Japan's Nikkei 225 fell 3.11% to 26,170 points, while the Topix index declined 2.61% to 1,842 points. In South Korea, the benchmark Kospi dropped 3.5% to 2,614. The Hang Seng Index and the tech-focused Hang Seng Tech Index in Hong Kong slipped 1.99% to 23,807 points and 3.81 points and to 5,383 points, respectively. Chinese mainland shares also declined. The Shanghai Composite slipped 1.78% to 3,394 points. The Shenzhen Component fell 2.77% to 13,398 points. In Australia, the ASX 200 retraced earlier gains and closed at 1.77% lower at 6,838 points. And stock futures fell early after the Dow Jones Industrial Average and S&P 500 turned lower overnight following a Federal Reserve update by Jerome Powell at the conclusion of its two-day meeting. Futures tied to the Dow Jones declined 260 points, or 0.76%, recovering from earlier declines of nearly 500 points. S&P 500 futures and NASDAQ 100 futures slipped 0.9% and 1.17%, respectively. Some tech shares were higher in extended trading after continued swings in the regular session. Netflix jumped more than 4% on the news that Pershing's Bill Ackman bought 3.1 million shares. Tesla gained almost 3% following a strong earnings report, and while Intel lost 2% despite strong earnings. And oil prices fell early as the U.S. dollar strengthened following signs that the U.S. Federal Reserve will tighten monetary policy in the world's biggest oil user. Futures pulled back amid a broader decline in financial markets triggered by the March interest rate increase telegraphed by the Fed, and as the dollar climbed against its major peers. Dollar-denominated oil becomes more expensive for buyers using other currencies when the greenback gains. Brent crude futures were down 57 cents to $89.18 a barrel after earlier falling by as much as 1.1% to $89. Brent climbed 2% at Wednesday. U.S. West Texas Intermediate crude futures were down 83 cents to $86.52 a barrel after falling by as much as 1.2% to $86.34. WTI gained 2% in the previous session. And gold held steady today following a sharp drop in the last session as safe haven demand driven by concerns over Ukraine countered gains in the U.S. dollar and Treasury yield. The Federal Reserve signaled interest rate hikes starting in March. Spot gold was unchanged at $1,816 per ounce after closing 1.6% lower on Wednesday in its worst session since November 22nd. U.S. gold futures fell 0.7% to $1,816. Fed Chair Jerome Powell struck a hawkish tone, flagging a rate increase in March and saying there was room for further policy tightening without hurting employment. All right, after the break, commodities market update is next. Do stay with us. This is Business Incorporated. Welcome back to watching Business Incorporated live on Channels Television. Now to our next conversation. Nickel, a crucial component in electric vehicle battery production. In 2021, nickel witnessed a 26.1% price increase to $20,880 per metric ton, which is actually a 13-year high. The price continued its upward trend in 2022 before settling at $23,047 per metric ton on Wednesday. Let's get more now from Favor Ogunraye, analyst, financial derivatives company. Great to have you.
For having me.
So it's a 13-year high. Quite interesting. What is responsible for this steady rise in the price of nickel?
Well, the upward price movement in nickel is really just similar to what's happening with other base metals such as aluminium, cobalt, and that is partly linked to the electric vehicle battery production, just like you mentioned. And then, we all know that there's an increasing transition to achieve, carbon neutrality. A lot of countries have set targets, and so that is fueling the demand for electric vehicles, and at the same time, the demand for nickel, because it's a crucial component in making the batteries. But then, apart from what the transportation sector is doing, we also have a major driver, which is the stainless steel industry, which accounts for about 70% of nickel consumption worldwide. And also you have China, which is the largest consumer of nickel. We've witnessed the economy has witnessed and is still witnessing a recovery. We are talking about the industry and the infrastructure and the construction industry, which are major consumers of stainless steel. And even though the price of nickel as at this week has actually declined by 5%, we expect that the growth in the stainless steel industry and also the increasing sales in electric vehicles, we expect that this will fuel the demand for nickel and prices in the long term.
Yeah, quite interesting. It's all about energy transition right now. But Appian successfully acquired one of the world's largest open pit nickel mines in 2018, but closed a $1 billion deal to sell it to Sibanye Stillwater, one of South Africa's actually biggest miners in 2021. But the deal was recently terminated. Why did this deal crash?
So South Africa is the leading nickel producing country in Africa, and they have about 80% market share according to Fitch Solutions. So this $1 billion deal is something that reinforces South Africa's position in the market, and because they're also venturing into Brazil, and Brazil is the third largest. And Brazil has the third largest, highest deposit of nickel in Africa. So by consolidating their internal operations and then exploring, other things in Brazil, that means that South Africa's operations and competitive advantage should expand. But then the deal crashed due to, geotechnical events, which made one of the walls of the pit to collapse. And I suppose it's something we can link to the climate change events that has happened in Brazil throughout the year.
Yeah, climate change a big issue right now. But what is this? How has this impacted, competition within Africa's nickel market?
It just really, like I said, the deal was meant to reinforce South Africa's position. But then, because we only have Africa's nickel producing countries nickel producing capacities dominated by Tanzania, South Africa, about five countries. So South Africa is the one leading the chart. So it's meant to reinforce their position. But then now that the deal has crashed, I guess other players can also take advantage of that competition right there.
Quite interesting. But how is Nigeria faring in terms of nickel production?
Currently, Nigeria's the only instance of nickel in Nigeria is in Kaduna, northern state, the northern part of Nigeria. And I guess the reason why other countries, because if you look at the the countries that I mentioned, I think the topological factors give them that competitive advantage in nickel production. So I guess what Nigeria can do to actually take advantage of that increase in investments would be to, develop the manufacturing capacity. And I guess with the after here now, they can leverage on this opportunity to, tap into this high deposits in other countries, so that we can also meet our own, steel demand here in Nigeria, and also produce products that can earn foreign exchange for the country as well.
All right, commodities have, had it good, towards the end of 2021, into 2022. What's your outlook for the commodity space?
A lot of the gains that we saw in the commodity space had to do with COVID-19 pandemic, the supply chain issues, but we don't expect the supply chain issues to be as intense as what happened in 2021. So we expect that prices would rise, but then not as much as we saw in 2021, as we expect that supply chain crunches should, ease off, and that would kind of bridge the supply and demand gap as well.
And what other commodities should, be on the radar right now? We talked about nickel today. What else is out there?
We're talking about, we know what's happening with I think what's happening with oil prices as well, the demand for oil and the supply from oil with OPEC and stuff. So I guess that's something that we should also look out for, like what's happening in that space, and how the price movements will also impact us here in Nigeria.
All right, Favor, I'm looking for the next commodity gem to invest in. Thank you so much, Favor, right there, analyst, financial derivatives company. Thank you for coming on the program.
Thank you for having me.
All right, moving on now. We see Ghana will in the next few weeks start the construction of a facility to produce COVID-19 vaccines under what the government calls fill and finish agreement with some global pharmaceutical giants. The facility, which is a collaboration between Ghana, Senegal, Rwanda and Germany biotechnology company, will result in the local vaccine for treatment of viruses as well as tuberculosis and malaria. President Akufo-Addo disclosed this at the opening of the New Year School at the University of Ghana. President Akufo-Addo reiterated that Ghana should never be in a situation of begging for vaccines. That's why they're putting effort into producing theirs. Nestle will start paying cocoa farmers cash if they send their children to school rather than out to 10 crops, as part of a push to purchase all of its cocoa through a fully traceable, directly sourced supply chain by 2025. Chocolate makers are coming under mounting pressure from investors, consumers and governments to make sure the cocoa beans they produce were not produced using child labor or in legal cocoa plantations in protected forests, both of which are common in West Africa. The food group behind Kit Kat chocolate bars and Smarties confectionery said it will triple its current annual spending on sustainable cocoa to give a total investment of 1.3 billion Swiss francs by 2030. To qualify for the payments, farmers have to send their children to school, prune cocoa trees, plant shade trees, and diversify their income with other crops or livestock. And the UAE authorities have announced the resumption of all inbound flights for national and international carriers and transit passengers from 12 African countries from January 29th, while adhering to precautionary measures. The General Civil Aviation Authority and the National Emergency Crisis and Disasters Emergency Management Authority announced resumption of travel from Kenya, Tanzania, Ethiopia, Nigeria, Republic of Congo, South Africa, Botswana, Eswatini, Lesotho, Mozambique, Namibia, and others, updating the entry measures for travelers coming in from Uganda, Ghana, and that was reported earlier. Those coming from the above-mentioned countries to the UAE have to have a negative COVID-19 test obtained within 48 hours. All right, and that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.